We've got some fresh new young talent doing some things that I know you haven't heard before.
1, 2, 3, listen.
You got to have the why, and we know our why. So
you don't need to reinvent the wheel. Yep. Millions and millions of people have done this already. You can get help, you can get a roadmap, you can save a lot of time, money, and frustration. Welcome to the Value Add Podcast with K&K.
Hey everybody, Value Add with K&K. Crystal and Kenny here. Just want to say thank you so much for the support, for listening, the comments, everything. Keep it up. We'll keep going as long as we can.
And if you like what you're listening to, like what you're watching, tell your friends about it, leave us a review, maybe even give us 5 stars.
We love those.
That's how we can grow and continue to bring you guys value and spread the word.
Thanks, guys.
Hey everybody, welcome back to another episode of the Value Add Podcast with K&K. Today we have Bill Anderson. He's the principal of Acre Commercial. If you don't know him, well, you should. Hey Bill, thanks for coming on.
Hi.
If you don't know him, you should. Yeah. That's true.
Well,
People that listen to this podcast know.
I like that. I appreciate that.
Thanks for coming in, Bill.
Absolutely. Thanks for having me.
It's Friday after Halloween, so yeah. Some people are hungover.
Roads were a little quiet this morning.
Yeah.
Saw a lot of people in pajamas and Uggs.
So jump right in, Bill. Tell us, when people come on here, I think for you is we've known you for a while. We're good friends, traveled, all that good stuff. Kind of tell us, I guess, how you landed in selling commercial real estate, because I'm sure there's a lot of options before just jumping in.
Absolutely. Again, thanks for having me on, and I'm certainly excited and glad to be here. So, I grew up in a family with a dad as a real estate attorney, and so for me, my direction was always, like a lot of, I think, kids, they look at their father and the success he had, and I wanted to be an attorney. And
right, I remember that.
Yeah, and God, I'm glad I didn't do that. I mean, oh my gosh, talk about arguing for a job, but. So through college, that was my focus, and I think once I took a little harder look at what entailed going into that profession, I started to really kind of lean a little bit more towards finance. I ended up doing really good in finance. I got recruited to be a stockbroker.
Wow!
And so I was leaving college thinking, the first year I got to make $1 million a year. I mean, I was stressed. I was, I had buddies that were, working at a surf shop or bartending or doing this, traveling the world. I immediately jumped right in and said, I'm going to wear a suit. I'm going to travel to New York. I'm going to work on Wall Street. And that's what I did. So I got recruited to work as a stockbroker with Merrill Lynch. And then I moved over to Morgan Stanley, Dean Witter. And you worked on the 87th floor of the World Trade Center, which is crazy.
Wow. What year is this?
This was in 2000. I left.
Okay.
Wow.
Yeah, so we did training out there.
So you went to New York.
I went to New
York.
York.
I didn't know that.
Yeah.
So every time we come on there, somebody tells them I didn't know. I never knew you went to New York. It's crazy.
I mean, it was at the height of the IPO and the tech boom. It was nuts out there. I mean, I was a kid. I was 21.
And you were working
years
the
old,
World
22.
Trade Center.
Yeah, I trained in the World Trade Center on the 87th floor. We had experience on the trading floor and all that jazz. And I was wearing, black pinstripe suit, slicking my hair back. And I'm from, I'm a Southern California kid, and I'm stuck in New York, and it was a shock. And I didn't know what I wanted to do. I was scared, but I believed that this would be a good foundation, and that I really thought, oh my God, I'm on my own for the first time. Mm-hmm. I need to go out and I need to prove myself to the world. So I ended up working for a little bit at the bond department there, and then I love New York. It's great stuff, but moved back to California. Couldn't be away from the water and friends. Was a stockbroker for about 4 or 5 years. I built a book, and when the crash happened, I lost all faith in the analysts, all faith in my company, When my clients were calling saying, I want to sell.
What crash? What year?
The crash that basically the
.com?
The .com.
Okay.
Crash, yeah.
Okay, cool.
We were doing IPOs and secondary IPOs and making,
So this is early 2000s
This
still.
is early 2000s. Okay. 1 year I did over 100% in stock trades on a return.
Wow.
And I thought, this is great.
Yeah.
People would call me and say, what's, TXI? What do you think of that? I had no idea.
Yeah.
So, you punch in TXI in your Morgan Stanley computer and it pops up and it says, buy, sell, or hold. And then you can talk about it and that type of thing. So what happened was when it went sideways, my clients lost money. And we were basically playing a game. We were trading stocks. I didn't start with a team, so I didn't have the proper training. And there were so many diverse products out there, from strips to CDs to commodities, options, futures,
Crazy.
Equities. And they're all out there competing for your money. And how can I sat there when things were going bad and people were losing money, and I said, how can any one person be a specialist in all these different areas?
Yeah, you can.
And at that point, I'd already bought some real estate, and guess what? My real estate wasn't going down. And my clients that were diversified, their real estate wasn't going down. And real estate's, again, out there, it's another form of competition for your money and your investments. So I did an about face. I walked down the hall one day and into my the senior VP's office, and I said, I'm done. And
Wow.
I just walked right out. That's it.
Do you remember what year that was?
That was in 2004.
Okay.
2003, excuse me.
Check after the crash, after 9/11,
Right.
all that mess.
Yeah,
Okay.
absolutely. And 9/11 was another.
Were you in New
kick.
York then, or were you here?
I wasn't in New York, thank God. I had left New York about 8 months
Okay.
Wow.
prior
Not
to
that
that. No.
And then
So
when
that-
you
that
moved back
didn't
here,
help.
where'd you move to?
When I moved back here,
Just California.
yeah, I started my career in Malibu
Okay.
at Merrill Lynch.
Okay.
So I went home, and that was a sticker shock for me, just living.
Yeah.
And then being a stockbroker, and it was so fun to tell people, hey, I'm a stockbroker.
Right.
And my friends that were 21, 22, they're like, good grief, like how's this guy gonna get anybody's money?
Yeah.
And I really refused to go after family and friends, so I just anyway, came back, quit, and had met at that point my wife, and wanted to travel the world, and with what money we had left from what I had lost in the stock market. And but again, we were able to rent out our condo, and it paid for itself plus. So we traveled the world. I got an MBA in Australia, and
Wow.
a year later we came back.
How long were you gone for?
We were gone for about a year, so we traveled through
right.
Europe.
It's pretty cool.
Yeah,
that you could
ended
do
up.
that.
Yeah, it was great. It was great, and that's something I encourage a lot of the young people that are coming into real estate or coming into my firm, is to take some time to kind of learn about yourself. Take some time to go and see the world, and because when you come back and you start your hustle,
Yeah. You're gonna grind.
You've
for
got
a while.
you've got to be committed, and
Yeah.
you're not going to have the opportunity to do that.
Because you can't just turn it off.
No, you can't. do
You
that.
can, but you're not going to be that successful. Right.
Exactly. And that sows, some things that need to be, I think, need to be done. And you need to,
I agree.
learn a little bit more about yourself. I was 21 as a stockbroker. That's I wouldn't have hired myself looking back. It's crazy. I had enough congeniality and
Yeah.
ability to talk and to get by. But, when you're
But
giving,
what do you know when you're 21?
when you're giving a
Yeah.
21-year-old, your life savings, that's tough. And so I learned a lot through that, and it was challenging. It was very difficult. I think it definitely provided a lot of toughness that I brought into the real estate world. So I came back from getting my MBA, and real estate was an option because I had a finance degree, and I knew the alternatives to real estate. and I understood the dynamics of financials and the capital markets and interest rates and all that. So walked into at that time Marcus and Millichap, and
now you're here.
and now I'm here. And
Wow.
we sorry, that was a long
No, I
answer
like
to
it.
your question.
No, but I didn't see. I mean,
but that's my background.
people are going to listen. I mean, I knew about Australia. For some reason, I think you mentioned before you were talking about stock. I didn't know you went to New York, which is crazy
Yeah.
because
I knew you were a stockbroker, but I didn't.
California, you just get up and you're like, I'm going to New York.
Oh, yeah.
And I know we grew up in the same area, Westlake, Thousand Oaks.
Yeah.
It's just like a little, I don't know, it's like a little bubble.
Oh, yeah.
So New York compared to there is like, holy, I mean, there's
Night and
LA
day
close, but
different.
no, it's just crazy.
It was a shock. I mean,
Yeah.
I remember being in the subway, and there was a woman standing, and I stood up to have a real different experience coming from where we grew up in a small town, and then going out to New York. And I mean, little things like being on the subway and standing up and letting a woman sit down.
No, they don't do that.
They don't do that. They don't do that. And the woman
Like,
looked
this
at me
is
and
my
she
seat.
said, I've been riding this subway for 20 years and I've never had somebody stand up. She said, you must not be here. And I'm like, yeah, okay. I'm definitely not. And this is not the way, I was raised. And then running down, Manhattan in surf trunks, doing some exercise with no shirt on. And, New Yorkers kind of looking at this guy like, running past him with
Yeah.
blonde hair, the tan, and
going on
trunks
here?
on. Yeah, this is not happening. People
awesome.
weren't doing
You're
it.
like, don't
so.
be jealous.
No, yeah, yeah, absolutely. So, and then 7 years at a corporate firm. So I'd moved to San Diego and started.
This is what, 2005?
This is 2004. Right at the end of 2004.
The economy is like booming.
Right. Jumped into the apartment game as an apartment broker, and spent 7 years there. Grinding, hustling.
Did you knew you wanted to do apartments? Or
No, I had no idea.
How long did it take for you to sell your first deal?
That's a good question.
Yeah, that is a good question. So I came into Marcus under a guy that I was warned to not work with, but that was very good. I'm not going to say his name.
We know who it is.
Yeah. And
Like he was just difficult, or
very difficult. Wouldn't
Yeah.
look me in the eye when I talked to him. His staff wouldn't help me. So I learned on my own. Now I had been already a professional, and I know a lot of the younger men and women that come in
or fresh?
they're fresh.
Yeah,
Maybe
from
they didn't have
college.
business acumen or what have you. I had some, and I had some modest success in
and
stocks.
experience working with successful people too, which
Absolutely.
is different. Yeah.
Absolutely. So, after 3 or 4 months, of being somewhat frustrated with my quote unquote mentor, I fired him. And that year I did 22 deals
Wow,
my first year.
Holy
Yeah.
shit.
that's huge.
Now that's certainly, had something to do with the market. That was certainly part of my back being against the wall, having, a wife and with a baby on the way. But it also, I think, had to do with the fact that I was ready to find what I wanted to be good at.
Yeah.
And it was such a breath of fresh air going back to being a stockbroker and all these different things you had to know.
Yeah.
Here was a specialty. Here was one
You could know
thing
everything
that
that you
could be
needed to know.
really good at.
Yeah.
And you could feel it and you could touch it and you could learn it and you could talk to people who were successful at it. And it wasn't this sea of options.
12 options. Yeah.
No, absolutely.
But I also
So-
think there's like a confidence too, Bill, because you were saying like when you graduated from college, you were like, I'm going to make $1 million this first
Right.
year. Now, people might laugh or think like that's ridiculous, but at the
Right.
same time, there's like a confidence in you that you just have
Sure.
that other people don't. And that comes across when you're in sales too.
Right.
So for you to even think that, I mean, that's the type of person that it takes, I think, to close 22 deals
Right.
the first
It's a mi- yeah, 'cause
year
there's
that
a
they go
mindset,
out on
right?
their own.
Like,
Yeah.
Yeah.
Well, and my mentor actually did me a favor, because if he had held my hand, if he had actually shown up to meetings that I booked where I showed up and he didn't show up, and I'm sitting there brand new and I'm looking at these people and waiting for him. And then finally I said, you either got to do this or you're going to fail.
Yeah.
Additionally, I was so scared of failing. And so when you say that you have the confidence, I think certainly there was confidence, but what drove me more was the fear of failing, the fear of not.
Was it fear, you think, for like, I gotta show my parents I can make it, or it's something, right? Is it the fear?
Yeah, I mean, at 40,
Right.
in my mid 40s now, I think that's very different.
Yeah,
Yeah.
for
But I
sure.
think when you're young and you look up to your dad and you look up to certain people in your family, and they've had success, and they wake up every morning and fight the good fight. You really look to them to or you hope that they're gonna give you the good old boy pat on the back and you make us proud.
Yeah.
That's not as important anymore. Once you actually do make the first
Yeah.
million,
Yeah.
the first
Yeah.
million, you're kind of like, okay, now other things are happening. But that was a major drive for me. Certainly is and what I'm doing now with this is kind of going off subject a little bit. What I do now with the young men and women that come in is I let them take a deep breath. I say, look, just because you went to college or just because you graduated with a finance degree or you did a real estate class or whatever, you know nothing.
Yeah.
And if you sit with me and you listen to me and you take notes and you do as I say and say what I do and hear me now, believe me later, you'll have an MBA after a year in real estate. I mean, you're not going to have the degree, obviously, but
Yeah.
you will know.
Better than that, though.
It's better than that.
Yeah.
And you'll have practical,
It's real
life
life.
experience. And no one said that to me when I went in and was a stockbroker. No one said, look, you don't know anything. And that was very hard. It was extremely hard because it was this idea of almost pretending.
That you know.
You fake it till you make it.
Yeah.
But I don't want my people, my guys and gals, to fake it till you make it because these are real people that we're dealing with.
Yeah.
These are investors. We're dealing with a lot of money. And
they depend on it.
Right.
Live off of
And
it,
so,
yeah.
and so, they learn and then they can then do it themselves. So,
That's cool.
yeah.
No, that's 22 deals. That's pretty crazy. I mean, even if the market's good or not, that's still like, it's, like you said,
Yeah.
it's anybody could be in a good market and they can't do 22 deals.
Yeah, that's huge.
Yeah, that's a lot of
It
deals.
was.
Yeah.
And as funny as it is, I didn't even know what title was. I mean,
What do you guys do anyway?
Yeah, they come in and like this is back in the good days when they used to be able to give us stuff, and
Charger
you'd have like
tickets,
a charger tickets and like a bottle of Patron on your desk
Yeah.
with a ribbon on it. You're like, all right, what did I do? Well,
Yeah.
you closed all these deals with us. Okay, well, you kind of I know what title insurance is, but I really, in the end of the day, I was like, well, I just put your name on a contract, right?
Yeah. So funny.
So you learn, and I definitely had to teach myself a lot of things, and.
So you're, let's see, 2005, and then
end of 2004, and then in 2010, myself and a couple other successful agents at the company were starting to get that itch, that 7-year itch
Yeah.
in business, believing that the corporate bureaucracy and tape and middle managers and constant badgering of policies and not being able to partner with our clients and not being able to do deals and just being handcuffed and most importantly them taking 50%
Yeah, that's
of your income, right?
Exactly.
And so I got together with Chris and Craig and we sat down and I said, look, I think I can do this better. I don't think I need a national platform. Generally, Southern California apartment owners are buying Southern California apartments.
Right.
And it's very rare, unless you're doing institutional deals, that someone from New York is going to buy, a 4.5 cap,
Right.
in Ocean Beach,
Yeah.
a 10-unit building.
Yeah.
I mean,
Yeah.
it's not going to happen.
Yeah.
And so we built our platform based on an open door policy and working together.
And you guys built it too, 2010. That's like the
Oh,
economy
it was
garbage.
It was horrible.
Yeah.
I made as much that year with the structure of under Acre as I had in, probably my second or third best year at Marcus.
Wow.
Because of the difference in the splits. Now, we took a huge risk.
Yeah.
They weren't happy about it. But we built a boutique brand based on eliminating a silo mentality. I mean, when we were in our corporate environment, and there's great people at these firms that are corporate, and there's definitely a need for that, and they do good with what they do.
Some
good
people
with.
stay there for a long time.
Absolutely.
I mean, and that kind of thing, and
have
that's
a ton of success.
it's for them.
Absolutely.
Yeah, that's for them.
But what we did was, I remember being at that company and walking out of my office and shutting my office door and locking it to go to the bathroom because I didn't trust the guys I was working with in the bullpen to not go in and look what's on your desk or what's sitting on the printer or what have you. So our basis was, look, we're going to be better together. 2 + 2 = 3 type of a synergy. And we're going to share information. We're going to share databases. We're going to respect each other when somebody's already working with a client. We're going to partner up more. Everybody in our company is going to have access to the same information. Whereas prior, the guy in the office next to me was my biggest competitor.
Yeah.
And he would undercut me for any reason. I'd undercut him. And so we started our company on that basis, and we've been
just
now in our 10th year.
It's crazy.
Now in our 10th year, and we are consistently in the top.
You're a name.
1, 2, 3.
You're a name. You're a competitor.
Southern California.
Yeah, and I remember too, because I met Crystal like 2009, but I remember kind of knowing you guys. But I just remember, I'm gonna say this, like people were definitely negative on you guys. So I didn't know,
Absolutely.
I didn't know when people were negative. They're hoping you're gonna fail because
of course,
yeah. And I think, they're going to come back. They're not going to make it. And obviously, the economy's bad, and you guys are here 10 years later. Now, those people they don't have to eat their words. They're like, shit, this is a competitor now.
Yeah.
It's a problem.
Well, were you guys kind of, because I think since then, a lot of people have broken off and started their own companies like new brokerages, but were you sort of like the first one to do that in that time period? Or?
Yeah, I mean, it seemed that way.
Yeah.
At the time. I mean,
feel like I remember it that way.
Yeah.
Too. Like that was a big deal when you guys left.
You probably didn't know it, but you gave people confidence.
I mean, I would hope so.
I'm sure.
The way that I really didn't go out and with the goal of setting up this big brokerage machine.
Yeah.
I mean, what we wanted to do was we wanted to retain some good clients, retain more of the hard-earned money we made and we believed we deserved, and I wanted to go somewhere and work with people that I liked and that I trusted.
So you're more like, let's create our own atmosphere. Let's go surf at lunch. Let's share clients. Let's do deals. Let's make money. Let's high five. Let's not compete. Let's be.
Absolutely. I believed that why fight each other and make more money for this company when we can work together and make the same or more
for you and your family.
For us and our family and the lifestyle that you build around that. It's worked really well for our clients. It's worked really well for our agents.
It's worked really well for San Diego, like having, somebody like you, because you do guys help a lot of people and you're a good name, and you guys have good people and good brokers or, salespeople, whatever you call yourself in your company, and they're respected. Yeah.
And I mean, you own your own business. I mean, it's tough. I mean, it's a lot of work, but
it's not for everyone, but I think
it's not for everybody.
It can be good when it's good, and then sometimes shit happens and it's bad, and you're dealing with lawsuits or pissed off people or this, and it's like yep, I'm the guy that's got to take the call. Like somebody screwed up, it's me. I'm the owner.
But we have that discussion too. It's like I think certain people are built for more of a corporate structure and they like that structure.
Right.
And then certain people aren't. Like I want to do whatever I want, however I want to do it. I don't want to have to conform to someone else's idea of what is right.
Precisely my scenario as well.
Yeah. So, I mean, that's why we end up being in business. And I tell people too that are thinking of starting their own business, it's either for you or it's not, because it's definitely not like you're living the life, like not hardly working, and life is just so easy. It's actually harder in a lot of ways, but it's work that I enjoy doing.
Absolutely. And I was at a point too where the sales managers and the regional manager were telling us how to do things that they'd never even done.
Right. Yeah.
I mean, the regional
It's always
manager at this company made associate.
Yeah.
And he had sold like 2 deals. And he was in there walking around, big fat cat, telling us how to do it. It's like, buddy, I did more than you did in your first year.
Yeah.
So rather than giving you this, and this has been a message to the people that have come and worked for my company. I don't pretend to believe that that what I've created is going to be their end result. If you have that in your gut, if you want that bad enough, go do it yourself.
Yeah.
But this is not indentured
You're
servitude.
You're a vehicle.
Yeah.
You're a vehicle
Absolutely.
for somebody, or they're like, I'm your vehicle forever. Whatever.
Right.
Yeah.
And a lot of people don't want to hire people like us.
Yeah.
Because at first it's great. You'll make money, but then you'll say, wait a minute. I don't necessarily think that this is the best way of doing it. I can do this. So it is hard to hire people who you think are going to be rainmakers or what have you, because they have choices.
Yeah.
And they can do it themselves.
Well,
But
salespeople, we have a kind of a built-in confidence too. I mean, that's why
Absolutely.
we do sales.
Yeah,
So you
yeah.
think you can do anything. So there is that. I mean, it's a balance for sure.
without a doubt. And going that route was in 2010 was a risk. A lot of people wanted us to fail. I mean, I remember going in and putting my hand out after I'd cleared my desk the night before and trying to shake the regional manager's hand, and he wouldn't shake my hand, and he looked at me and said, "I hope you fail." And I thought, wow, after being with you for 7 years, you want me to fail because I'm not subscribing to your club.
Yeah.
It's like, now when people come to me and they say, and I've learned a lot from those types of
For
scenarios that I'll never forget. I mean, it's made me stronger. It's made me a leader. Now when I've guys or gals that say, hey, look, I'm taking off, I say all the best.
Doors
Yeah.
open.
Tip of the hat to you. If I can be of any help, let me know. And hopefully, if you do compete, we work together.
Yeah.
Yeah.
We
I
make
mean,
money.
James Carter's was under me
Yeah.
at Marcus, and
Yep. And he does his own thing
and
now.
James and I have closed all sorts of deals.
Yeah.
And so
There's
you
many
try not to
others that
burn.
we know too.
Yeah.
Same thing. Exactly. Yeah.
Yeah.
I think it's friendly competition. And the one thing I was going to ask you, Bill. So I think a lot of people, just in real estate in general, but your thing is, I think a lot of people come into the industry because they see somebody like you. They don't know all the work and legwork in the back end, but
Sure.
they're coming in, but they see the success. Just like people start buying apartments and they see the guys that have, hundreds of thousands of units. They're like, I want that.
Right.
It's a process for everything.
Right.
But if somebody is, I'm stopping here before we go further, but if somebody is coming into your office or Marcus or wherever, what should somebody new be looking for, in your opinion, and what are some questions they should be asking, and what should the expectation be on them, like coming in, what should they expect to do, and how to be, like, and your thing is, what should they come in to be successful, and what should they come in and not do, or like,
Right.
you
Right.
have these conversations all the time.
Yeah, absolutely. I over my career, it's interesting because I've actually seen kind of a shift in the young men and women that are coming out of college or kind of these entry-level jobs. And unfortunately, there's more of, what can you do for me? There's a handout.
Do we call that entitlement?
It's, yeah. And as real estate professionals, we work on commission. And so more and more I'm seeing people submit resumes with, what's the starting salary? Well, there's no starting salary, and your back's against the wall. And
It's actually going to cost you money, probably.
Right,
For sure.
right, absolutely. And so, and then when you start looking at the mentorship and what I'm going to do for you, that's an important thing for them to understand. So, number one, I'd say, don't expect any handouts. You're not going to get paid to come in and learn a career that could make you millions upon millions of dollars. Okay.
Quick question on that.
Yeah.
Do you think if somebody's offering a handout or like, hey, here's the salary, do you think that's kind of like, might not be a great place to be, just in your opinion, because it's like too easy?
I think that there's some validity to that, but No, I mean, if there is a position where you can, perhaps there's a candidate you see some really good characteristics in. Maybe they've got connections or family history, or they've got a really good handle, or they look like they're going to be, and they need some help. I've done that before, but I always do it more on a draw because I want to know. I want them to know that they have to earn this.
Yeah.
That this is not going to be given to them. That you don't just walk into the business and make $500,000, $1 million and life is good and I'm going to buy a bunch of buildings and I'm going to, by the time I'm 30, I'm retired. So number one is just the handouts. But that's a good question. I mean, we've done certain things flexibility wise with our agents, but it's always been with the understanding that that's what I'm teaching you is going to be paid back to me.
Yeah.
Number two is they should understand what the commitment's going to be. They should really go in understanding that this is not a 9-to-5 job. If you want a 9-to-5 job, go punch a clock, get insurance, get 401k, go make your whatever they're paying out there. Going back, I remember when I first started, one of my buddies was making like $100,000 a year, and he had been making $100,000 a year since he was right out of college, and or even before that, he had a small business and he was making money as like a 16, 17-year-old, and I was just like, God, my buddy Kevin, he kills it, this and that. Well, guess how much money my friend's making now? $100,000 a year.
Yeah.
And there was a point to where there was balance there, and then where I just kind of superseded him. And so you have to have the ability to come in, understand there's no handouts. Number two, understand what's expected of you. And number three, have patience and understand that if you have a mentor or there's a leader who will give you the tools, help you provide an environment where you have the tools to succeed, it will catch up. I mean, I tell the young gals and girls in my office, I say, look, you may not be making money right now physically, but if you're doing what I'm telling you, you're making money right now. It'll dollar cost average over the period. Mm-hmm. If you don't make anything for a year and a half and then you make $300,000, okay, well, you made X dollars.
Years, yeah.
Right.
Yeah.
Exactly.
Well, it kind of goes with, I think I remember when I was first getting started in the business, somebody told me, like you can go get a job and you can get guaranteed that salary. Like, exactly what you're making. You're making whatever, 50, 60, 70,000 a year. Right. And that's what you're guaranteed. Right. But if you're willing to take risk, then you can make a lot more.
Absolutely.
So that's really what we kind of all decided getting in the business is like, hey, we're going to take this risk because I want more than just that.
Right.
And some people are happy with that, and that's great for them.
Nothing wrong with it.
Right. But
absolutely.
For me, I was like, no,
it's a personality trait. It really is. Like you were saying in the beginning, like somebody always told me, it was a friend of mine, her mom's a very, very successful real estate agent, like in Ranch Santa Fe. And she always said like, ooh, I don't know if she get in real estate. I go, why? And she's like, because it's a lifestyle. It's like, what do you mean? She goes, this isn't a 9-to-5, sweetie. This is a 24 hours, 7 days a week. Right. You're on vacation. And if you're not prepared then don't even bother because you're never going to be successful.
Absolutely.
It's not something you want to come in and go, oh, I want to get in real estate, make $80,000 a year. Right. You should want to come in here, like you said, I want to make $1 million a year. That's kind of a mentality, and you're willing to work like that.
And and with what you said there, it's another thing that I tell new agents. I said, look, if you're happy with making $100,000, get out of here. For your own good. It's not gonna be good for me. It's not gonna be good for you, because you don't have the benefits of a corporate job. You're not gonna get pay sick leave. We're not gonna give you, your holidays off.
Paid vacation.
You don't get a 401k. You don't get insurance. So that's gonna eat into that $100,000.
Yep.
And then you're gonna end up being real flexible, with a real estate job, making, a lot less. So, look, when you're starting out, $100,000 is a ton of money.
Yeah.
And so that's great, but you should want to continue to build and continue to build wealth and get in a position where you can be your own client, where your clients are.
Yeah.
I always say, it's like, I don't want to be on either side of the deal. I want to be in the middle of the deal.
Right.
Yeah.
So just to finish your original question,
Yeah.
because I'm the king of going into different directions.
No worries.
Kenny,
You know,
can you relate?
as much as the new candidate, the new agent should express the qualities and the characteristics and the track record that they'll bring to the company, and with understanding what's expected. They should also be very adamant about what's going to be provided in the scope of a mentor, because you get a new real estate person in there and you've got a mentor that's vacant, that's just gone. If they don't have any real core training or real core background, they're going to be gone in a matter of months. And, you know, the only other thing I would say is just be prepared to, you know, have humility and be patient and have resolve and be a rock, because people are nasty out there. I mean, they're nasty. You know, it's a sales job, and
Skin.
you got to have thick skin.
It's
and
funny
you
'cause
got to
now-
enjoy the process.
We have a lot of new agents call us now. Obviously, just when you have apartments or you've done anything, they call you and try to sell you deals or whatever.
Right.
And now I'm so nice. We're very nice
Oh,
to
yeah.
those people because I have respect for the fact that they're doing it
Absolutely.
and trying, and
Right.
it's just like wild to me.
Yeah.
Somebody did tell us,
Yeah.
I won't mention names, but they own a lot of units. You know who they are.
Right.
The good real estate investor. And he's like, he always said that, like, when they call you, just pick up the phone and be respectful.
Absolutely.
And he said, and this is somebody that owns over 1,000 units. So,
Right.
And he said, don't ever act like you have some ego or you're too big, because you never know, that junior or that person calling you might not even understand what he has. And he calls you, you're the first call, and he goes, I have this deal. And you're like, wait a minute, what's that deal?
Absolutely.
Who'd you call? Nobody? Hey, don't call anybody.
Right.
Like, give
Yep.
me the stuff. Like,
Yep.
yeah. And you never know.
And also, you never know what kind of agent they're going to turn out to be. Like,
Right.
you know, 5-10 years down the road, you just don't know.
Absolutely.
And I always tell, and people come to Crystal and I go, hey, so how do you get off market deals? How this? I said, rule number 1, don't be a pain in the ass. Rule number 2, don't be a pain in the ass. And I
Right.
mentioned rule number 3 was don't be a pain in
Right,
the ass.
right.
What's that like? If somebody calls you and you have a good deal and Bill's calling you and he's like, this is done, and you're trying to get a better deal. It's like, no, this is already the better deal. Just
Right.
get it done. And people want to start negotiating, and are they just a pain in the ass? I'm like, nobody wants to deal with you.
Right.
He didn't bring you an off-market deal to deal with the pain in the ass. He brought you an off-market deal because you're going to close and make his life easy, and his sellers.
Right. And that's another thing that I try to instill in our agents is there has to be a value proposition. You know, I think a lot of new agents are out there, and they're calling these sellers, or excuse me, these owners, expecting that they're going to just say, "Oh yeah, I you know, so glad you just called. I'm looking to sell my building." Well, what's the value proposition there? I mean, a lot of times we need to have some type of bait, or you need to provide information, or you need to have an opportunity, or you need to be able to distinguish yourself, or you need to be able to go above just, hey, Kenny, Crystal, or you guys want to sell something? Yeah. I mean, it's like, you know, and so I built a lot of really good clients by just chipping away at exactly who they were and what they wanted, and what would make them end up picking up the phone and calling me. Mm-hmm. And so that was a big thing for me to learn, is like they're getting contacted by a lot of people. I mean, we're all calling and trying to sell them, you know, a toaster oven. Yeah. And if you call and say, hey, I'm selling you a toaster oven, but there's some toast as well, you know, or whatever the analogy is.
Yeah, I know what you're saying.
You know, there's more value there, and they have to learn that early on. Is what am I providing? Mm-hmm. Besides just, oh, well, I can sell your building. Anybody can do that.
Yeah.
And, you know, and fundamentally in sales, if you like somebody, you know, and that was something I had a hard time with as a stockbroker. I felt very young. You know, I wear glasses now because I have to.
Yeah.
But when I started, I was 21, wearing a suit, sitting down, advising people on portfolios of equities, generally stocks. And my regional manager came in and he said, you need fake glasses. You look like you're 12. And so I got fake glasses. And then for a long time I stopped, because I was confident. I looked a little bit older. And now that I am in my, early to mid 40s, I have to wear glasses. So,
That's really
thank goodness.
You still look young, so don't worry about it.
I remember being young though too, because I started when I was 19.
Yeah.
And I remember just like sweating every time I had to go meet with a client to like, I didn't know if they were going to order a cocktail and I couldn't even drink.
Right.
And I even remember when I was younger, like, can I just get like a couple gray hairs or something? Just something.
It's like, God, I wish I was balding.
Yes. Yeah.
Until now.
Now I'm like, oh, okay, this is good. But I didn't have the confidence in where I was when I was 21, 22, 23 to be myself. Because I was dealing with older people, and I was like, why? I live at the beach with a couple buddies.
Yeah, they could be your parents.
Yeah, they could be my parents. I mean, I had a meeting one time with some investors, and then I saw them walking on the boardwalk down in Mission Beach, and I was in trunks and sunglasses. They walked right by me. I had no idea.
Yeah.
And at that point, I was like, oh my gosh, like I'm in a different world than these people. I've learned more and more as time goes on to have, it's
all right.
I learned more and more to have the confidence to be myself.
Yeah.
And that people would like me. For me, even the young people, you never know who you're going to get. And some of these investors want the young, fun young man or young woman who's just real. Like, and I didn't realize that. I thought you had to be strict and a business person and a calculator and, this is the only way I'm going to get business. You're providing. And that's how that was the image of my dad as an attorney, was going into his office and you could hear the clock ticking. Tick, tick, tick. You could hear guys on the phone yelling too, or doing their work, but it was very structured. It was very tight-lipped. It was very,
and serious.
Don't say anything that, a professional shouldn't say. Don't be, don't crack jokes or, so it's something to be yourself and go out there. People are going to like you.
You create your own environment. You guys listen to music, do whatever you want to do.
Right.
Yeah, it's fun.
Absolutely.
I mean, you can still have fun. You can still do whatever. I think people realize that you never know who's walking down the street now. You don't know if the guy owns a freaking company or he could be riding on a skateboard on the boardwalk with $1 billion. You just don't know anymore because everybody now is just like they are who they are, and that's one of the things I think I like about the world. I think social media is some ways helped out, and people are like, "This is who I am. If you don't like me, then I don't really care."
Exactly, and we're seeing more and more of this. I think this investor and I should say a professional environment is a little bit more relaxed, especially in Southern California.
For sure.
So I haven't worn ties since I left for 10 years. Since I left the corporate firm that I was at, I haven't never wear a tie. I have 40 ties sitting collecting dust.
It's funny when you look at him too, because you're like, "Holy shit, I wore this."
I was like, "What's the point of a tie? Like, what? I wipe my mouth with it, or like, what the hell is this? What is this? And why is it like? Is it? Am I supposed to feel like uncomfortable with this thing around my neck?" So we throw jackets on, and we're business casual generally in the office, and then when it's necessary, we want to look professional, but Southern California is also a little bit more laid back.
For sure.
So, if I'm sitting with a guy I've done deals with and we're in jeans and, we're having a beer at lunch and we're talking about, multi-million-dollar deals, that's great. Yeah. I mean, everybody's comfortable, but that's taking time.
Oh, no,
for
sure.
I mean, that's taking...
That was one of my questions for you is, I think a lot of people that we meet or we talk to, we were talking about this earlier, is I think one of the questions is, you meet with somebody, they're like, "Hey, I own a building and I want to get to 500 units." Right? Like, how the hell do I get to like that guy?
Right.
And obviously, like, we get asked the question, you get asked the question, or somebody's coming to you saying, "Hey, Bill, I got this," or "I'm going to hear," like, how do I get there?
And you've gotten clients that you've helped grow.
Yeah. Oh, yeah, absolutely.
And I think a lot of young brokers too is they haven't had enough, longevity in the business to be able to build somebody a portfolio or take them from, hey, they were worth $5 million, now they're worth $50 million, and it was all built with me.
Yep.
Can you kind of talk about like strategy of maybe, with clients or just kind of like somebody that's coming to you, like what is your strategy of getting somebody to grow? And then, what does that look like?
Well, I think it's a profile of the type of investor that is almost kind of organically kind of obvious. I mean, I guess to reiterate what I'm saying is, for example, one of my clients, when I first introduced myself to him, he had a lot of people were talking to him, and he's very short with people, and this is what I want, and this and that. But there was a kind of an immediate, I think, respect for my ability to kind of give it back to him a little bit, and the way he was with me, very short and fast, and I was very witty and quick to come back with him and give him the idea that, look, I understand what my value is. I'm not trying to get something for nothing, and this is what I can do. Mm-hmm. And once I understood and I recognized that this was someone who had, for the lack of better words, cojones, and wanted to do a lot more, then my loyalty started to build. You have to really start to have emotional intelligence and learn about that and understand and be able to read between what people say and read actions and expressions and this was a guy I knew, just as one example, who wanted a lot more out of what he was doing. He wasn't as conservative, and so we started with one deal, and he behaved very well as a buyer. So when I said to do something, he respected me for what my recommendation was, and he did it. And then he got the deals. Mm-hmm. And so time after time, if you start getting involved with investors that are extremely challenging, a lot of times you kind of got to move on. You want there to be a mutual trust, and you want them to understand what your value is. So picking and recognizing an investor in the marketplace and seeing what they've done over the last 5 years, and then asking those questions of where do you want to be in 5 years from now? And okay, rather than, again, what you can do for me by making me commissions, mm-hmm. is more of like, this is what I can do for you, and we're partners. Mm-hmm. And I'm going to sell you this building, and guess what? That I'm a partner in that building, because you're damn well going to sell that building again with me, and we're going to go into another deal that I'm going to find you. That process is worked well for a number of people that I've been able to have real strong relationships with. Loyalty is very challenging in this business, and you guys
for sure
understand that as owners, and
rare.
I do too. It's very rare, and your next deal is really the only thing that creates any type of loyalty, because somebody's going to call you, you're going to be nice to them, you want a deal, and being able to just commit to one person doesn't really happen that often in this business, from a client standpoint. So if you're lucky enough to work really hard and show your value, that's really how you create your loyalty. And getting more of a friendship, mm-hmm. kinship, going out.
It is going to go that way.
Families involved, that type of thing.
And it goes back to, like you saying, if you have a client who's just being difficult or tough to work with, it's like, hopefully this is going to be a long relationship. So
right.
You can't build a relationship with somebody that you're bucking heads with all
right.
the time.
Right. Absolutely. Yeah. And if you early on in your career, some of those difficult people you're going to have to deal with.
Yeah.
Because you got to put,
because it's
bread
a deal
on the table.
Yeah,
because it's a deal. But you're going to get to a point where that pendulum shifts, and you're going to start to choose a little bit more of who you want to do deals with. And when we have opportunities, it's exciting. I mean, when I know something's juicy, mm-hmm. or there's a really good opportunity, or there's a really good fit with an investor, that's a present.
Yeah.
I mean, I can't tell you how much wealth or more wealthier I would be, or more billions I would own, if some of these opportunities I was bringing to people when I first started, I could actually afford to buy.
Yeah.
Yeah.
I mean, I couldn't.
Gosh,
It was like signing, contracts for clients that were in Europe with an exchange and buying, deals I knew were steals.
Yeah.
But it was more important for me to create that relationship and that trust and to get paid that commission.
And now, so Bill, I feel like there's a couple different kinds of brokers. Like there's those transactional brokers who are always hammering the phones and looking for new clients, and they're probably newer in their business and haven't built up a book.
Right.
And then there's people who I look at, I definitely see you as more of this type that's a little bit more of like an advisor,
Right.
where you might not work with so many different people, but you have a handful of people that you really have helped grow and advise all around.
Absolutely.
So, I mean, what do you think about like those brokers who are just doing transactions? I feel like I've heard it before, like you're spinning your wheels all the time.
Right.
Do you prefer to help people like help grow their portfolios? And are you advising them on more than just that deal that they're buying, like different aspects of the deal?
Yeah, absolutely.
Yeah.
I think over time when you have a relationship with somebody and you start to understand the way they tick, then moving away from the kind of the machine gun, just spraying bullets out mentality and being more of a sniper and being able being able to really organically, intrinsically see a deal, understand the ins and outs of the deal, and being able to digest it and then regurgitate it to only a couple people who may be good candidates takes skill, and then having them trust you because you worked on many deals with them or you've got track record with them, and then letting them run with that. So I'm absolutely advising people on property management, on lending, on the rental markets, improvements, CapEx, anything and everything under the sun. But it goes back to, through the years in any business, you're going to create partnerships like with you guys. I mean, and getting them to a good lender or getting them to, a good property manager, and having a team. And I think that's important. I think being able to getting away from the idea of just being a transactional, that's going to be okay for a while, and everybody's kind of has to start that way. But that in times when things get tough, that's going to be hard. And so that's really been my philosophy. I've been fortunate.
Yeah, I
fortunate.
agree because it's kind of, the market's been really good for a while,
right,
as we all know.
Absolutely.
And at some point, there's a correction, whether this or that. But I totally believe that, because I think when the economy's good, people might not pay attention. When the economy goes down, they're like, man, I need to make sure that I'm working with somebody that really knows what the hell they're doing and what's going on. It's rather transactional. So I think when it's down, I think that's important with anything. Lending, property manager, selling the building, whatever it is. I think people, because last downturn, I know people just for property management in Arizona, they the client, he almost lost his halls, everything, because this property management company just let his big buildings go to hell in a handbasket, and he's 30% vacant, couldn't make his bills, and it's crazy. Right. So I think it's who everybody works with, who's on your team, is super, super
Well, it comes
important.
back to that value proposition too, because I think that's one of the things we definitely believe in with our clients too. If I can set them up with a good, insurance person or a good property manager and a good real estate attorney, whatever it is that they need, a good broker, then it helps all of us. It helps them to grow, and then you're building that kind of trust and rapport with them and making sure that you actually care about their asset and want it to do well.
Yep.
So it's been important for us, and we do it too. I think it's nice to have a team that you can count on.
Absolutely.
Yeah.
And there's buy-in. It's you're advising on multi-million-dollar investments, and if you just do that deal and then you walk away and you're not following up and you're not talking to them and you're not helping them through that process, and the odds are you're not going to be on the other end of that transaction, which is really what we're trying to do.
Right.
We're trying to move clients through investment timelines to where they get to the day where they're just going to say, look, I'm I'm done. You know, I'm going to retire, and this is my retirement. Thanks. Tip of the hat to you. You know, and hopefully I'm not still working.
Yeah, right.
What so speaking of the market, where do you, I hate to say like, oh, how's the real estate market, but where do you kind of, I mean, look, we've had a good run, and a lot of people made a lot of people made a lot of money since, you know, let's just call it 2008 or 9, especially in I mean, like, people say you can throw a damn dart at anything. If you bought it in 2010, you'd probably double your money. But what are you kind of seeing out there now is people that are super active, or maybe, you know, or I know obviously super active guys just keep buying because they have a different, people don't understand it, but they always know as shit will be more expensive in 20 years than it is now. Right. It's simple.
Right.
But I know you get people calling you like, I don't know if I should buy. I mean, what's the conversations look like when you're talking to the pro and then somebody that's, you know, maybe you work with that maybe has a building that's talking about, oh, I want to buy another one here, but they're just kind of holding back or not sure.
Sure, absolutely. I mean, good question, and it's always one I wish I had a better answer for. Crystal ball, and so look, I mean, whether you're a seasoned investor or you're a new investor, I mean, going back to my early days as a stockbroker, and what I wanted to do is I wanted to be good at something, one thing. I wanted to be a specialty in one thing, because I knew if I knew that, I could help you. So what I look at is I look at just the basic fundamentals of Southern California real estate to start. Okay. So where are we at? We've got a major demand for housing, a major demand for affordable housing, right? We have rents that have been, we've seen in the double digits in the past, the recent past. We now have rent control, which is a whole nother story, and actually is not a bad thing.
Not good for the tenants.
Unfortunately, it's not good for the tenants, and I can go on forever about how, you know, our government has restricted our decreased our upside for landlords, but our expenses are, you know, because of their regulations, go through the roof. So it's mind-boggling. It's an inverse correlation that just is bizarre. It's not a good way to make money, and it's not a good way to run a state. But anyway, just the fundamentals and where we're positioned with Mexico to the south, and everybody knows this. We got the Pacific Ocean, we've got the desert, the four walls that we're stuck, and we've got immigration, and we've got, just an absolute perfect storm for being an apartment owner. I mean, there's just no question, right? Nowhere to build, all that. So I first and foremost look at that, and then I look at where debt is, and debt is as good as it gets.
So cheap right now.
It's so cheap.
Yeah.
And so, you know, the cost of capital is something to look at. And then you've got to take a look at our historical performance and what things have what's occurred, and make a pretty decent assessment with a forecast of what the future is going to look like. And it's pretty darn bright. So, I mean, just taking a very simplistic look at things, I think it keeps the market going. And it keeps things pretty darn healthy. As far as where I see like right now, well, I think the rent control initiative has paused a handful of the market. I think that we're seeing it's slow, just a hair.
So people figure out what.
I think a lot of people, when they see these things, there's just like, oh, it must be bad. It must be, oh my God, I can't raise my rents more than 7.5. Well, look, Mr. and Mrs. Client, what did you do for the last 10 years?
4% maybe.
Not some of them, not even. I mean, some of them's like, well, and so I'm saying, yeah, so 7.5%. That's pretty darn good. And guess what? I might have done 3%. Now I'm going to do 7.5% no matter what. Yeah. You know, I mean, so the fundamentals are good, and if debt continues to remain, I think at a pretty stable, it should with the elections coming, and you know, the global economy is definitely, you know, a little dicey right now. And so I think our government's going to do the Fed's going to do their best to kind of keep things kind of calm, which means either cutting rates or keeping them
Quantitative easing, yeah.
right. Exactly. So if you're in the know, if you're an investor that is, you're either new or you're tenured, get out there and start looking for opportunities. Now your big value add deals might be a little bit more tricky. There's going to be a little bit more red tape. You're going to have a good team, both with capital improvements, renovations, raising rents. You're going to have to keep your nose clean.
Make sure that they know
Right.
how to guide you.
Right. Exactly. But they're still out there. And
There's always deals, right?
And quite frankly, the moving costs that you have to pay, like the 1 month rent, that's
Minor.
a joke.
Yeah,
I
it's
mean,
minor.
compared to what people are paying tenants to get out in LA and San Francisco, I mean, it's nothing.
Right. Absolutely.
It's like a salary they're paying people.
And some of us were already doing something similar when we were buying buildings to rehab.
But
so
people don't understand.
Oh, absolutely.
But the pros
Without a doubt.
understand that. The pros aren't because they understand they've been doing it.
Right.
Because they want to move quick. So to move quick, you just capital makes people move, right?
Right.
Somebody doesn't have a lot of money. You present them with money. They're like, oh, I'm out of here. They can go find another deal.
Yep.
So that's where I mean, it's funny because a lot of people we talk to, it's always the four walls, here.
Mm-hmm.
And I just think that it's funny if there's another big apartment owner. He's like, if we go into, everything goes to hell in a handbasket and everything goes in a recession. And I don't think a lot of people forget about this is when the recession hit, we didn't build for 5 years.
No.
So when people were hurting in their businesses and apartment owners all of a sudden go, my values are down, but wait a second, my rents are going up.
Right.
Wait, my rents are going up. And all of a sudden, people had businesses and the stock market, everything else were getting crushed, but rents were the first thing to start coming out. And they reminded again, they said, everybody always asks him, what if this? He goes, it's the same thing, guys. If we go into a recession or an economic downturn or it's bad, they're not going to build because builders don't build when it's bad because they can't get money.
Right.
So my apartment building here, guess what?
So the demand just increased.
It's worth more because you can't do what I have.
Right.
And then you take a place like San Diego where we're behind 100,000 units, nationwide 2.5 million. I mean, you can't. And it's funny because the rent control, we can talk about that for a minute. The building association is now suing the California. And everybody's like, why? I'm like, because they're like, you're not understanding what we're trying to say. Is if you would drop the regulations and drop all the bullshit and you allow us to build affordable housing at affordable levels and just do it quickly, we would do it. I mean, Crystal was on stage speaking at an event and there's a lady up there for a company and they do $500 million a year building, which is a lot.
Yeah.
She said, we would do $2 billion. We have the money, but we can't because of regulation.
Right.
We barely can get this done, and we're really good at what we do.
No, absolutely.
Like really good. And so that's the other problem is like you and I would love people to build affordable housing because it needs to get done.
Right.
But
yeah, and unfortunately, the political, I think, atmosphere or
landscape, whatever.
Landscape, is not going to change quickly in such a highly liberal state. But that goes back to what I was saying. In my opinion, they missed the mark on the homeless crisis.
Yeah.
Everything I've read and everything I've seen and is we've got, essentially mental illness and drug abuse. And so, it's putting a cap on rents is, not going to do it. And also the regulations that have increased the cost of water and electricity and all those things. And there's this idea out there that, landlords are these big fat cats, and the majority of the buildings in San Diego are, 8 to 12 units.
Yeah.
And so who own those? Well, guess what? Those are the baby boomers.
Yeah.
Those are the mom and pops of the world, and they're trying to retire. And they may not have had 401ks or IRAs or what have you. They put their money in real estate. And now their expenses are going through the roof. And now you're capping their income. And so, I've seen more and more owners that sit in front of me that aren't multi-millionaires, but they're this is their retirement.
Yeah.
And it's sad.
And that's really the case for most real estate owners.
Absolutely.
I mean, most of us don't have the 401k or the retirement. This is it. This is what it is.
Right. I mean, I'd love to be able to, to cap what you make on your equities. Wouldn't that be cool?
Yeah.
Your stock portfolio, let's go ahead and limit it to 7%, you know? But you have all the downside in the world.
Right.
We're not going to cap your downside.
Right.
We're just going to cap your upside, you know? But you can lose the building. But anyway, going back to the market as well, in the last couple downturns that we've seen, I mean, how many foreclosures did you see in San Diego?
Very few.
I mean, few. If
We're talking
multifamily.
Right,
Yeah.
multifamily, right. And so I think the banks have tightened up a little bit. I think that, if you're going into and you're putting enough down and you're covering your DCR and, you're
not mismanaging the
no,
property.
you're not mismanaging. You're not going in with no money down BS with hard money, and you're not over leveraging yourself. It's going to be a pretty picture for you.
Yeah.
You're going to get rich over time, and you're going to be the millionaire next door.
Yeah.
Just as much as you can, get into any deal you can with good, smart leverage, good debt, and
get with a good broker and just
patience.
trade up when you can.
Yeah, absolutely.
Yeah.
Yep.
This guy Greg Willett, I think he's probably one of the best economic advisors in the real estate market for multifamily. He's works for RealPage.
Okay,
which we know.
Yep.
He's a piece of work, but he always says in a downturn, which is like kind of like you said, is one of the most important things is curb appeal. And then he just said, you're going to look at your expenses. Is there anything you can cut?
Right.
And then he just said, most people that are in a downturn, the economy shifts, which the place that's really getting crushed is the luxury. All the so luxury is getting killed.
Class
so luxury is
A.
going to go from A to B, and the B's go to B to C. So the B's that goes to C's are going to go, where's the nicest C? I'm going to go there first. That's where they look.
Yeah, absolutely.
So,
yeah,
that's what I always tell people is that's his recommendation is your curb appeal, make your property look nice. Right. You don't have to look crazy, but keep up with your stuff.
Absolutely.
And also too, and if it comes back around when you guys sell a building, it makes your life easier too.
Without a doubt. Yeah, absolutely.
People pull up, your life's a lot easier when it's like, wow, Kenny and Crystal take care of their property. This shit's done. This is going to be great.
Without a doubt.
And you can confidently say, when you're selling people's buildings too, this is for buyers, sellers, when you're selling somebody's building and you know who they are and that buyer's agent knows, oh, this guy keeps his stuff tight, your job's easier. Like, I know, you go ahead and do your inspection. I know the people understand. It makes your life easier. You're going to get more money.
Yep.
And the transaction's that much smoother.
Yeah, I mean, I would prefer selling a Class C building over a Class A building any day of the week. I mean, they're tough.
They are, huh?
Class A are tough, man. They look pretty, and they're sexy, and your name's on it, and it's a big.
The numbers never really look that good, though.
The numbers don't look good.
I feel like the people who buy those properties just want that pride of ownership.
Yeah, it's a legacy asset, and it's coastal, and but yeah, I mean,
what's your buyers, sellers listening to this right now? What's your biggest pieces of advice for a seller and a buyer when working with a broker, and what expectations should they have?
Yeah, I mean, that's a great question. It would be a generic response because everybody is certainly very specific in what their investment parameters are and what their timeline is and what their capabilities and qualifications are and their track record and all that. So, I mean, you can really complicate it, and I'd really try to approach everybody like that. So there's a lot of questions. But from a very, I guess, well-rounded answer, if you're a buyer, first and foremost is understanding what your end goal is. I mean, what are you trying to do? Are we looking for an asset that is going to be an appreciation play? Are you looking for an asset that's more of a cash flow play? It's hard to really match those. It's not impossible, but it's a little bit hard to match those. So just from a buyer standpoint, I mean, we've got people there every day that call, hey, we're looking for value add. It's like, yeah, everybody is.
Yeah.
And so as a buyer, I would say, what's your end goal? What are you trying to achieve? What are your capabilities? Do you have good, strong relationships with lenders? If not, call Kenny and Crystal. Do you have a broker that's in the know? Are you working with somebody that has a strong track record? Are you working for somebody that's hungry? Are you working for somebody that is you're looking to establish a relationship with? Or are you whoring yourself out to everybody and lowering your qualification, I guess I could say. So just having a plan as a buyer, and then understanding the different markets and really understanding where you're comfortable with, where you're not comfortable with. As far as the seller is concerned, I mean, more and more we see sellers are trying to time the market, and that's just I was with a seller yesterday, and he said, well, should we wait for Q1 and of 2020 and this and that? And I said, well, we just listed 2 buildings, and they're both under contract at full price, and we're going to break records in both submarkets for the price per square foot and the price per unit. Now, that doesn't mean that an appraiser is going to come in and say that's what it's worth. Of course, I always have to preface that, and but what I guess what I'm trying to say is just because it's Thanksgiving's coming and Christmas is coming and all this and holidays and then vacations
always
and all that. There's the
market.
We know one thing right now. At this very moment, this is what we know: where interest rates are, where 1031 exchange buyers are, who's what and what's what. In Q1, I can't tell you where rates are going to be. So I guess it's why wait.
Yeah.
And of course that bodes well for us, but do you disagree with that?
No, not at all, because for me, you've got to have to pee for so bad.
I worked out this morning. I'm really thirsty.
I think real estate investors.
I do have to pee, by the way.
Yeah, I'm sure. Real estate investors in general, like,
I'm good.
On vacation, no matter where they're at, are like ready to do deals.
Right.
So that's when somebody says, I heard that real estate is slow. I'm like, okay, we're not talking about buying a single family home right now.
Right. We're not baking cookies here.
Yeah, this is someone's career. This is what they do. Right. They buy apartment buildings.
And some people have,
it doesn't matter what time of the year it is.
I'm not going to say unlimited, but almost unlimited resources if a deal's come across.
Absolutely.
And I've been on the phone many a
Bill
Thanksgivings
knows who to
and
call if
Christmases.
it's a deal and somebody always has money. And they're it doesn't matter if it's Christmas at 12, they're going to be like, let's do it. That's just how it works.
Yeah, absolutely. So, I'm not even, residential is a whole different, game
that you're glad you're not playing.
And in commercial, you both nailed it.
I don't think there's a high season or a low season.
No.
So it's all year round.
No, absolutely.
There's always there's, like I said, is you guys know if there's a deal. And if it's got to be taken down, you know who to call and who will perform. It doesn't matter.
And I generally think the people who are asking those questions are people who are coming from residential, because I know in residential there's like one day of the year that people supposedly get the highest sale price or sell their properties the fastest if you list on like March 31st or April 12th. I don't know what day it is. But I think that mentality comes from people who are used to dealing with residential, because I've never thought about like, let's not list our bill. If I'm ready to sell, I'm ready to sell.
Oh, yeah.
It doesn't matter what day it is.
Yeah, absolutely. And so, I mean, if there's, any kind of major, I'm not going to suggest putting the building out on the market on Christmas. I mean,
exactly. Yeah.
I mean, if you want, but it's commercial. And if you're an active investor, people have 1031 exchanges. They've got to spend money at all periods.
Yeah.
I mean, I would just say, if you're going to list your building and you need to exchange, don't go on, a 4-month vacation and not be available. It's like when you're ready, mindset is we're selling, got to buy another asset. It is
absolutely.
I mean, even though it's work for you, it is work for a buyer.
Right.
They got to be committed. They got to be able to show up. They can't just be like, hey guys, we don't have so much time here.
Right.
And we've had this conversation. I just want to know what you think about those like cart before the horse buyers. Like, well, I need to find a property to buy, and then I'll sell these other properties with you.
Right.
Do you take those buyers seriously?
Ooh, good question.
Yeah. It's a stumper. I've recently dealt with some of those. Now, if I have a junior agent come in and which inevitably almost once a week I do, because they feel like there's something there. They come in.
So close.
It's so close. Like, look, this guy's got this beautiful building, and it's nice, but he really wants double the size. And if we can bring him a deal, he'll then list this. I have structured deals like that. We've been successful doing it. It's extremely challenging, but the probability is if an investor's not willing to put on their big boy pants or big girl pants, you're going to lose out. And we consistently get people who ask that, and we have to kind of change the way that they view this. And we have to say, look, I've never lost a 1031 exchange, $1.5 billion or more in closings. And we are able to put a timeline together that will give you X amount of days that is going to make you feel very, very comfortable. And then talk to these 20 people who we've done this for recently, and maybe that'll help. Some of them are going to be stubborn and say, absolutely not. And that's when those investors are generally going to overpay for real estate if you do structure that.
So question.
Well, I think of how many other buyers are you competing against who don't have that scenario, who have their money ready to go.
I mean, that's a thing.
That's why you're
not, and I was going to say this, and at some point you're a seller. And then once you're a seller, you put a buyer's hat on. And that's generally after your buyer. If you're a seller, you've got a seller's hat on.
Yeah.
The buyer comes in, they've got a buyer hat on. They go non-refundable and they commit a couple $100,000 or whatever it is. They can't get that money back. That's when Mr. Seller puts his buyer hat on. And then he can go to Kenny and Crystal, or he can go to this person and that person. He can say, look, I'm a credible, capable, qualified buyer. I'm going to be in a 1031 exchange. The probability of closing is high, and we're ready to roll. But there is a point where sellers have to, or owners who want something better, have to kind of take that risk.
Yeah.
And it's not, there's going to be very few people that are going to deal with you. But unfortunately, some of these sellers are going to get attention because they're going to have newer guys or gals who are going to think that there's something there.
Yeah.
And maybe they'll trip over something and say, here's something. Oh, I like that. Great. And maybe that seller will, for whatever reason, accept an offer from somebody who's not really a buyer. Anyway.
Yeah, I mean, I
just wanted to throw that out there because I hear it all the time too.
I tell people
and it's just
basically you got to sell. Like, and I just go, look, go ask a seasoned pro if they sell buildings. Some of them don't, but if they do,
right,
they know that they're like, no, sell. Or some of them have enough money, they'll buy it and reverse exchange and pay the fee because they can, but most people don't have that.
Right, reverse exchange is the other option. Yeah, and
but most people that are seasoned, they're just like, sell my building, Bill, and I know you're going to find me something because they know you're going to take it. You're going to be like stressed about finding something.
Yeah,
that's how you.
Absolutely, and
it's a liability for you almost because you know.
It is a liability, and it's a leap of faith, and you have to, if you yourself don't have that track record, you have to partner with someone who has a track record, who can look somebody in the eye and say, look, I know where you are. I'm an owner as well. I know it's scary, but look, here's these case studies.
Yeah.
And you just have to take that leap. Most of the time.
I agree.
So
I think I'm going to leave it at there.
Take the leap.
Take the leap.
Ladies and gentlemen, Bill Anderson, thank you for your time.
Thanks, guys.
Bill, thanks for coming in.
That was fun.
Where do we find you? Where does anybody find you? What's the best way to contact you?
What am I giving my phone number out to randoms? Yeah. Is
sure.
That okay. Cool.
Or
no, I'm
email,
kidding.
whatever.
No. Email is probably best. When my mom's mad at me, it's William, not Bill. So it's W Anderson. That's SON. So WANDERSON at Acre, ACRE, commercial.com. commercial spelled out. So wanderson@acrecommercial.com.
Cool.
Sweet.
Yeah.
Thanks for coming
Cool.
in.
Yeah, thanks
All right,
for coming
guys.
in. Answer all the
Thanks.
questions.
Yeah.
All right, brother.
Fun.
Cool.
Fun.